Hi, Lara from Forex Info USA with the free DJIA Elliott wave analysis for you for the week beginning Monday the 19th of April. So we're including some price action on Monday the 19th here, but not all of it. With the DJIA about to possibly move into a primary third wave down and economic news beginning to look slightly more dire, I thought I'd put my 2 cents worth into the mix and just add a little bit more confusion. All I knew when I started looking at these charts was that we were in a primary second wave up of a cycle degree wave C down, and that we've been expecting primary 3 to begin its imminent start any day now for about the last 2 months. So, to add my confusing wave count to the mix, this is for what it's worth, here goes. End of primary wave 1 here. Primary wave 2, really obviously looking like a triple combination, W, X, Y, X, Z. A couple of things that jump out at me first on this chart. It would have been very reasonable to assume, as it's a second wave, for primary wave 2 to reach up in its entirety towards the 0.618 Fibonacci ratio, about 11,245 points. That would have been really reasonable, so I'm wondering why a call was made way back here to say that it was over, although I have to say at this stage, using channeling techniques, we would have had a clear breach to the downside of any parallel channel no matter how you draw it for this wave W black, and it would have been fairly likely, considering it was around about the level of wave 4 of 1 lesser degree, to possibly call an end to primary wave 2 down here. Also, when we got up to the end of wave Y, again, possibly a breach to the downside of a parallel channel that could have been drawn, and possibly again a call here to an end to primary wave 2 could have been expected, because it's very rare to have a triple combination, and a double combination is much more likely. However, with this price movement now, I've had to play with these trend lines, and this is how I think it looks best. A trend line drawn from this low labelled X to this low labelled X, and a parallel copy placed here on the high labelled W creates quite a nice parallel trend channel that's contained this price movement apart from the very beginning. I would expect to see a full day's bar opening and closing below the lower edge of this parallel trend channel before I finally called an end to primary wave 2. That's what I'd be looking for. However, that is a very conservative and cautious approach. Taking you now to a daily chart where this X and this X is this X and this X. And I see, for the first thing I notice here in respect to Forex markets is the stock market chart seems to have much nicer diagonal structures that conform to the rules for diagonals much better than stock market diagonals, than Forex market diagonals seem to. I can find no discernible Fibonacci relationship within this wave W black between waves A and C. A really nice contracting diagonal, leading contracting diagonal to start off wave C blue. And I can find no discernible Fibonacci relationship within C blue between waves 1, 3 and 5. Within wave X black, possibly a reasonable Fibonacci relationship between A and C. Wave C is 48 points more than 0.618 the length of wave A. Thereafter, within wave Y black, again another expanding leading diagonal in wave C position, perhaps an example of the guideline of alternation quite nicely here. Between waves A and C blue within this wave Y black, I can find again no reasonable Fibonacci relationship between those. Within wave C blue, however, between waves 1 and 5, I can see a nice Fibonacci relationship. Wave 5 is 10 points short of 0.618 the length of wave 1. That's the first reasonable Fibonacci relationship I find here. Within the second wave X, again a nice Fibonacci relationship between A and C. C is just 11 points short of 0.618 the length of A, and B is a really nice 38% correction of A. Taking you now to an hourly chart or a 2-hourly chart, we'll have a closer look at this piece of movement I've labelled Z. And here it is, so here's that last X down here. So far, it looks like we may have had 5 waves up for A, a nice little 3 waves down for B, and we may be working just on the very end of wave 5 pink within wave C blue. Relationships between this wave 1 and this wave 3 are not within 100 points of any Fibonacci relationship that I can see. However, it would be fairly reasonable, I assume, to expect that wave 5 pink is likely to reach equality with wave 1 pink, and that would take the Dow up to 11,243, a little bit higher with one more 5 wave impulse to push up. Once I have that calculation, it's really interesting to see that that's just 2 points off the 0.618 Fibonacci relationship shown on this weekly chart here. So, for what it's worth, I would expect the Dow to have one more 5 wave impulse up to about 11,243 to 11,245, and thereafter to turn around and plummet for the start of primary wave 3. So that's my analysis of the Dow. You're welcome to critique my wave counts. I'm sure I've got a couple of things different to everyone else. I did this again, as I explained at the start, without looking at any other wave counts, just having an understanding of the bigger picture from Elliott Wave International and from folks at Kenny's. I hope this is, I hope it's helpful in your trading with the Dow. It may be, it may not be, that's fine. I hope everyone had an awesome weekend, and today, as always, may all your trades be profitable.